Hello guys, welcome. Good morning. Hope your night was fine. Good morning to today live synthetic trading section. And in today live trading session, I'm going to be analyzing some of these volatility indices pair and step indices pair. And if you are new to this channel, my name is Vetexx, and what I do is I analyze the synthetic market every day, starting from 6 a.m. to 7 a.m. Sometimes less than that, depending on how fast and what you see in the market. Okay, so we analyze the market using pure technical analysis and price action. So today we are going to be checking those synthetic pairs and see what the market has for us. So what the first thing I'm going to do is I'm going to be sharing the screen so that you see what I'm doing. If you have any question, do well to ask your question in the comment section and I will always answer. Okay, so if this is your first time of joining us, don't forget to like and subscribe if you are getting value. And most importantly, join our Telegram channel because that is where I share most of the updates there, what is happening and what some things you should know about. Okay, so I'm going to be sharing my screen right now and show you all what the market is presenting to us today. Okay, so today we have few pairs we want to check. I think we have up to like some pairs we are going to check up to like 7 pairs we are going to be checking today. We're going to be checking out 7 pairs today. I'll be breaking it down. First of all, we have the first we are going to be checking out is V75X. We're going to be checking out V75X and see what the markets have for us. And hopefully, we'll see something tangible and we'll be able to take it up from there. So, first of all, you remember when if you have been joining this live for some time now, you will remember the time I said we trade the advanced market structure, and what we do is we do top-down analysis. And what is top-down analysis? Basically analyzing pair from the higher time frame down to the lower time frame. It's more like you following a trend. Okay, you are following a trend of where price is coming from and where price is going to. So that is basically everything we do. And once we get our direction on the higher time frame, we'll scale down to the lower time frame, see where we can execute on a particular trade, and then we take our trade, hold to our target, we close. A repetition of the same thing every day. So if you are new to this uh, whole trading system, or you're just hearing advanced market structure for the first time, or algo, okay, you should visit the playlist of this channel where it's written advanced market structure. All the topics you need to understand, you need to know, I've already treated it there. You can take your time, watch the video, you learn a whole lot of things from there. So today I'm going to be before the initial analysis, I'm going to be giving you a quick breakdown of what the advanced market structure look like and how you can spot it on any market, be it in the crypto, the currency, the synthetic. Okay, you can easily spot the pattern and then you can make use of it to your own advantage. Okay, so first of all, we have 5 rules that guide the structure. Remember, I'm doing this for the sake of people that are joining me for the first time today. Okay, but after this, you still need to brainstorm, you still need to visit the playlist and then get some full, clearer understanding. Okay, so the first is that we have 5 rules that guide the structure. Okay, now rule number one. Let's say you want to sell using this trading model. Rule number one, we have price giving you a higher high, higher low, higher high, higher low. Okay. Now, from that, price will give you liquidity, sweep liquidity, break structure, and all of those things. So first of all, we have the first rules. Okay. Now, price gives you a high like this. Now, we'll consider this high to be our uh, liquidity. Okay. Now, this liquidity is what we call it transactional liquidity, and it needs to be taken out. Okay. Now, once it's taken out to give us our protected high, okay, it simply means this liquidity has been swept by this protected high. So first of all, this is our rule number one. There must be a sweep of liquidity to give you a protected high. Rule number one. Rule number two, you see this low here need to be taken out. Then we consider it as our first break of structure. So this comes like this. It's been taken out already. So now this becomes our what first break of structure, which is rule number two. Rule number one, there must be a sweep of liquidity to give us a protected high. This price must continue to the opposite direction to break the newly created low, which is this second break of first break of structure. This is rule number one. This is rule number two. Rule number three, now price must retrace 50% to give us our what structural liquidity is rule number three. And then rule number four, price must take out the newly created low again, which is this to give us our second break of structure, which is rule number four. And then the final rule, which is the rule number five, price must take out this newly created liquidity and continue to the opposite direction. So price will come back, take it out, and then continue to the opposite direction. So this becomes our point of interest. So after price take out the newly created high, which is the liquidity, price will continue to the opposite direction. So this is what we have, and then we have this also, and then we have this. So the whole of this zone becomes what? Our point of interest. This is now our point of what? Interest. This becomes our point of interest. So as price tap into this point of interest, it continues to move to the opposite direction. So this is what we have for sale. And the same thing we have when we want to buy. Okay. The same thing you see for sale is the same thing you see when we want to buy. So now this is basically it. Okay. So when you are doing top-down analysis, this pattern that you spot on this time frame, which is the 24 hour, which let's say you spot this your pattern on the weekly time frame or the 24-hour time frame. Now this will serve as direction. It will know that this is point A and then this is point B. Price starts from here and this is where it's going to take out the targets. All right. Now you are going to be start scaling. You are going to scale down from the 24-hour time frame to 4-hour time frame and look out for this same pattern on the 4-hour time frame. And when you spot this on the 4-hour time frame, you still look out for it on the 15 minutes time frame or the 30 minutes time frame. Then you can start taking your entry. Okay, then you can start executing your trade. Step you can start executing your trade on the lower time frame. Okay, now take for example, this is a 15-minute structure. You enter your trade from this point. This is going to be your full TP on the 15-minute structure. You wait again for price to give you another continuation on the 15-minute structure until where price starts from here on the 4-hour time frame is taken out. Then you are done trading that pet for the meantime, and then you wait again until price gives you another 4-hour structure so you can still keep catching sales continuation. So same thing you do for sales, same thing you do for buy. So this is basically it. So today we have uh what we are already looking for. Okay, I believe by that simple understanding you should get it. So you can watch this video as many times as you can on replay, and also you can check the playlist. The video is already there. So on the synthetic indices market, okay, on the synthetic indices market, what the the market is available 247, and it's more like a pure uh it has pure price action. It's not affected by news or economy or anything. So it is all about having that pure knowledge and applying it to the market. That is where you have a whole lot of clarity. Okay, it's pure knowledge. So once you understand technical analysis very well, top-down analysis, the rest is going to be so easy. So first of all, the first pair we are going to be checking out today is V75X. So on this V75X, you see that we already have our system playing out, which is our rule number one here. Sweep of liquidity is right here. Okay. Rule number two, we have first break of structure, which is this. Rule number three, price retrace 50% to give us what structural liquidity, which is this. Rule number four, price give us take out the newly created low, giving us first break of second break of structure. Okay. Now this becomes our protected high. The whole of this zone becomes what point of interest. Our point of interest. Now, this is 24-hour time frame, so we cannot execute trade on 24-hour time frame. What do we do? We've already gotten our direction on this time frame. The next thing is we scale down to the lower time frame and then take our entry. So this is going to be our finish point, starting point and finish point. You see that price take out this liquidity, tap into the point of interest, and it's taking it move to the opposite direction. Now let's get to the 4-hour time frame. The fact that price hasn't taken out this low, we still have more sales to take. Now, if you scale down to the 4-hour time frame, this is what is happening currently. There was a sell here that got a respected on the 1-hour time frame. We had a sell here. The 1-hour time frame, we have a sweep here. I believe you can see it. Then we have our protected high, which is right here. We have our rule number two, which is first break of structure. Rule number three, price retrace 50% to give us structural liquidity. Rule number four, price break this low, second break of structure. And then this zone becomes what? Our point of interest. So you see that after price comes to this zone, right, which is 1-hour time frame, you can start scaling down to the lower time frame, like the 15 minutes time frame, until price take out this target. You can enter the trade at this point and you smash the P, you still make a lot of profit. Alright. So this is what happened. After I give the set continuation, price move and smashes TP. Okay, so now let's check the next point of interest. Let's check what is happening next. As you can see clearly here, we have another continuation on the 1-hour time frame, which is we have our sweep of liquidity, which is here. This is our sweep of liquidity. We have our first break of structure, which is right here. We have price retrace 50% to give us structural liquidity, which is here. And then we have our protected high. And finally, we have our second break of structure. And this zone becomes what? Point of interest. So this is the 1-hour time frame. So the starting point is from here and the finish point is from here. So what do we do now? We scale down to the 15 minutes time frame if we find our continuation structure. If we find it, we mark it. But if we don't find it, we'll wait for a more clearer one to form. So as you can see, there is nothing here at the moment. So price sold into the premium zone and return to the discount. Now it's going to come back It's going to give us a continuation before taking out this target. But if it doesn't, we'll still wait until another thing happens. So the next pair we are going to be checking out is step 500. Let's check step 500. Step 500, starting from the weekly time frame, if the trend is bearish, but on the 24-hour time frame, we can't really see it clearly, but we already know that it's bearish on the weekly time frame. We know that it's bearish on the weekly time frame because of top-down analysis. So now we're going to scale to the 4-hour time frame. Let's check the 4-hour time frame and see if we have something tangible on the 4-hour time frame. On the 4-hour time frame, we have this. We have our sweep of liquidity here. We have first break of structure. We have price retracing 50% to give us what structural liquidity, and we have second break of structure. This is our point of our high, protected high, and this zone is what our point of interest. Okay, so this is the starting point, and this is the finish point. As you can see, price has been selling for a while. Price has been selling for a while. This is the target, and this is where it's coming to. It's sold and then it retraced. Now, what do we do now? Let's scale down to the 15 minutes time frame and check if there is a continuation there. Once you see any continuation, we can start taking it. All right, you can start jumping on it until price take out this target on the 4-hour time frame. So let's check the 15 minutes time frame and see. On the 15 minutes time frame, you can see we have a sell here. But the problem I just called out the sell on the Telegram channel, and then I asked the community to cancel it, okay, because there is something that happened and then we had to break even. We have to get out of the trade. All right, it's not worth risking on. It wasn't worth risking on. Why? Because it didn't give the confirmation expected on our point of interest. Confirmation wasn't there. That is why you need to study confirmation entry. I already taught confirmation entry, so that is going to be your assignment. I already taught confirmation entry, so it didn't give us confirmation entry I expected in the point of interest, so I just let it be. Okay, so you're not going to be taking the trades on that pair currently. You're not going to be taking any trade on it. So this is going to we're going to let it be. Though the setup is valid, but we are going to anticipate more move. If there's a whole lot of space price is going to take before smashing the target. So there's nothing happening currently on step 500, but we're anticipating a sell setup. The next we are going to be checking is step 100. Let's check out step 100. Let's check out what's happening on step 100. So step 100 on the 24-hour time frame is bearish, but on the 4-hour time frame, it's giving a continuation, which is this. Okay, we have a continuation structure, which is this. These are sweep. Okay, and we have what protected first group of structure. We have price retreat 50% to give us what structural liquidity, and then we have our protected high. This is our what second break of structure, which is this. Now this zone becomes our what point of interest. This one becomes our point of interest. This is the starting point, and this is the finish point. Okay. Now let's get down to the 15 minutes time frame if you are going to see our system. Of course we do. But I think this was the trade we missed yesterday. This is going to give us a very good 1 to 4 risk to reward. What? This is the 15 minutes. Now that we know that price is bearish on the 4 hour, let's get to the 15 minutes and it appears immediately. Now look at this. Look at this work of art. It's our sweep. Rule number 2, first break of structure. Rule number 3, price retrace 50% to give us structural liquidity that need to be taken out. Rule number 4, price take out the newly created low it created to give us a second break of structure. Rule number 5, price take out the liquidity and continue to the opposite direction. And these are protected high in the 15 minutes time frame. This is a clean 1 to 4 risk to reward. Then this is our point of interest. And then once price comes into this place, you look out for your confirmation entry, the type you use, or you can use the one I taught in the community, in the playlist. Confirmation entry, the topic is already there. It's just left for you to go and check it out. Understand, study it and understand it. That is your assignment. So anytime I say price confirm, price didn't confirm, you should know why I said it confirm. You should know why I said it didn't confirm. See? And that alone is going to help brainstorm you. So once price tapped to this point of interest, what did it do? It sold. As I said, look at this. Look at this. At this point already, I should be out of the trade. At this point, my 1 to 4 should be somewhere around here, if not here. I should be out there. This is a very clean, this is a very good trade. Okay, so since we know where price is coming from the 4 hour time frame, so price here has a whole lot of way to go. Okay, it's selling from here, and then this is the target. See, has a whole lot of way to go, so you can catch as much as 5-7 continuation before price take out this target. You know, let's check the next pair we are anticipating the sell on. I'm not going to be analyzing on the pair today, so let's check the next pair, which is V100. V100 is bearish at the moment, starting from the weekly time, from the daily time frame. We have our sweep of liquidity, rule number 1. To give us a protected high. We have rule number 2 here, first break of structure. Rule number 3, price retrace structural to give us a structural liquidity. Rule number 4, price take out the newly created low. Rule number 5, price tap into the point of interest, and then you need to continue to the opposite direction. Now this is our point of interest. This point of interest. Okay, after this point of interest, price starts from here, and then this is going to be the finish point. And let's get to the 4 hour time frame. If you are going to see our continuation on the 4 hour time frame before you can start jumping on sales. Okay, let's check if it's have anything tangible on the. There's nothing on the 4 hour. Let's check the 1 hour. We don't have the structure on the 1 hour yet, but we hope it form and then we can start taking it. Alright, once it's formed on the 24-hour time frame, you wait for it to form on the 4-hour time frame before you can scale down to 30 minutes, 15 minutes, and 10 minutes and start taking sales. That is what I do every single time. Now let's check the next pair, which is Vetexx. Okay, I've already marked down these two. Vetexx is bearish on the 24-hour time frame. Right, we have our sweep here, We have our first break of structure here. We have price retrace 50% to give us second break of structure 2 after giving us the structural liquidity. These are point of interest. These are protected high. Now price tap into this point of interest, continue to the opposite direction. This is the starting point, and this here is the finish point. This is the starting point. This is the finish point. Now let me go to the 1 hour time frame and check if you are going to see the continuation of the 1 hour time frame. So we want to split. Okay, good. So this is what you're anticipating on the 1 hour time frame. We have a sweep here. We have our first break of structure here. We have price retrace 50% to give us what structural liquidity here. And then price break the newly created low to give us what second break of structure. This is our protected high. This here is our protected high. And this zone is our what point of interest. So now that we know that price is coming from the 24 hour time frame, anticipating price to come to this zone and give us a sales continuation on the 4 hour time frame, on the 15 minutes time frame after tapping the point of interest on the 4 hour time, on the 1 hour time frame. So this is what we are going to be anticipating until that happens. Alright. So this is what we are going to be anticipating henceforth. So if that happens, we'll take trade, we'll take sales on this pen. So the next we are going to be checking out is V90S. V90S has been bearish on the daily time frame. As bearish on the daily time frame. So we have this. We have sweep of liquidity here on the daily time frame. Most of the time I do my analysis from the weekly time frame. But once I notice that the trend is very bearish on the weekly time frame, I'll just find my pattern on the 24 hour time frame or the 4 hour time frame. And then I will look for continuation and then try to sell. If you're having any question, you can ask. The floor is open. And these are point of interest. So price tapping to this point of interest is continuing to the opposite direction. This is the finish point. So this is 24-hour move. Let's go to the 4 hour time frame and check if we are going to find any recent point of interest that we anticipate. So you can see currently on the 4 hour time frame, we don't have anything yet. It's just that this POI got used recently and we are avoiding it. It has already smashed the target. This has already smashed the target. So we have something like this. This smashes the target already. Alright. So let's check the next pair real quick, which is V50. V50 index. So I'm going to be beginning my analysis from the 24-hour time frame because on the daily time, on the weekly time frame is bearish. So I'm going to let me just mark it out. You can mark it with me if you have been following me. We have our first break of structure. Remember, we always have first break of two break of structure and then two liquidity, and those two liquidity, the first one needs to be sweep out, the second one too needs to be sweep out. The difference is the first liquidity, which is here, is transactional liquidity used for correction, while this one is used for continuation. That's why anytime price take it up, continue to the opposite direction. And this is our point of interest. So price is going to move from here, and then this is going to be the finish point. So now let's go to the 4 hour time frame if we anticipate any continuation. If there's any continuation to anticipate, we'll wait for it. Okay, we we have been waiting for this continuation, but it hasn't come back yet. This year, you see, one thing about top-down analysis is that you just be at peace with trading. You don't just chase random setup and then try to be like you want to catch every move in the market. If the trend is bearish, you just stick to the bearish trend. If it's bullish, you stick to the bullish trend using your system. Whatever system you're using, you can do top-down analysis from it. Just start from the higher time frame. You can see your structure on the higher time frames, come down to the lower time frame and take it continuation. You don't have to be doing buy to sell to buy, and all of those things. So we have this. So we're anticipating price to tap into this period and give us a continuation on the 50 minutes time frame. And if price doesn't come there, we also have this. We also have this, which is this. So what happened was that I had a network glitch and we're almost done for today. Almost done. Let me quickly run through V15 index and then we'll call it a day from here. So let me refresh and then go to the analysis. We'll call it a day from here. Sorry for the delay. So quickly, let me so V15 index. Let's check out V15 index real quick and then let's see what we have. So currently V15 index was bearish on the 4-hour time frame, which you can clearly see from here. It gave us a sweep here. This is our point of interest. This is our structural liquidity protected higher. First break, second break here, and then it smashes the target. You see that it took out this target. So currently this is what you're anticipating on V15. You're anticipating this on V15. We have another 4-hour structure here that once price tap into it here, we start anticipating the same type of pattern on the 15 minutes time frame. So once that happens, we'll hold the trade to our target. And if price didn't come here, price is going to respect this 1 hour time frame. So that is the two setup we have on V15 currently because it's bearish on the daily time frame, bearish on the weekly time frame. So on the hourly time frame, we mark this. We are anticipating this currently. Once price tap here, it's going to give us continuation on the 15 minutes. This same type of pattern. The only difference is once it's tap here on the 1 hour, we will not sell yet until you do the thing, give us the same type of pattern on the 15 minutes, then we can sell. So those are the best I have on my watch list. That is currently on my watch list for the last week of January. So we have V75S, step 500, step 100, step V100, V30S, V90S, V50, and V50. So these are the pair we are looking at for currently. These are the pairs on my top on my watch list right now. Um, Probably before the week runs out, we are going to be taking a whole lot of trade on it. So I believe you got value from this live session today. And if you have any question, do wait to message me on Telegram. And if this is your first time of watching this video, if you are watching this video on replay, make sure you subscribe so that whenever I go live, you'll be the first to see my notification. And then you can always join my live and get value. So if you are getting value from this video, don't forget to like. Most importantly, subscribe, share the link to your friends, your family, and your loved ones who are interested in learning more about trading. And don't forget to join our Telegram channel. Now, if you're wondering where you can start trading volatility indices, the step indices, the broker I use is called a Deriv broker. The link to registration is in the description of this video, or you can check my bio. You can see the link right there. Register, fund your account, join my community, and then we'll take trade together. So same time tomorrow is 6 a.m. I'll see you on live. So do have a nice day. Stay safe out there. And whenever you're taking trades, don't forget to apply risk management. See you tomorrow. Bye.